Peter Schiff is president and global strategist at Euro Pacific. He joins me now from Stamford, Connecticut. Peter, thank you very much for joining us. You heard at the top of the show, we had Dan Fuss on. He was suggesting that you really got to take any market reaction to numbers these days with a grain of salt because there aren't very many people trading, so moves get exaggerated.
Well, I think the market isn't reacting negatively enough to the housing data, which is only going to get worse. We're not just going to have a hard landing. We're going to have a crash landing. All the inventory that's on the market is going to continue to build, and eventually prices are going to collapse beneath the weight of all that inventory. And then you fast forward a few months or next year, and a lot of homeowners who took out adjustable rate mortgages, negative AM mortgages, interest only, as their rates start to reset, and they have to struggle to make those higher mortgage payments, they're going to have very little incentive to do so when their house is worth a lot less than the mortgage they're trying to service. And so that's when you start to see the defaults, the credit contraction, and the price declines really kick into high gear. And then, of course, when you see consumers who have to spend every last drop of money on their mortgage payment, that means they have very little money left to go to Home Depot or to go to Walmart. So consumer spending falls off the edge of a cliff, and there goes employment and the economy with it. So it's going to be a self-perpetuating spiral where the housing market and the economy both go down together. And unfortunately, I think the Fed is going to be fighting inflation and raising interest rates, into that recession. And that's just going to exacerbate the problem.
All right, I want to talk more about this crazy optimism of yours, but we have to take a quick break. If you'll stay with us, we'll be right back after this word, and we will talk more with Peter Schiff from Euro Pacific. He sees a recession ahead. He'll explain why. Discussion on where the market goes from here and the economy in light of today's and tomorrow's home sales data. Let's bring in Peter Schiff, the CEO of Euro Pacific. He comes to us from Stamford, Connecticut. Peter, before we took a break, you were telling me that you don't have very high hopes for the economy going forward. Consumer spending is going to fall off because home sales are falling, but they also told us that when they said gasoline prices were going to rise, consumers would stop spending. They didn't.
Well, if you look at what people pay for gasoline versus the interest payments on their home mortgages, the mortgage payments are far higher. And I think what a lot of people have been able to do is they've been able to extract equity from their homes and use that extra income that they've extracted to pay for higher gas costs. But once you see home prices falling, access to that ATM is gone. Meanwhile, we're going to be struggling to pay the interest on the money that we've already borrowed.
Well, the number of people who have adjustable rate mortgages, according to the Federal Reserve, is actually quite small in proportion to the number of mortgages outstanding. Plus,
no, it's probably about 25–30%. And I think more importantly, if you look among the subprime market, and then if you look at the very expensive markets like California, you have a much higher percentage of adjustable rate mortgages. I think if you took a look at the total dollar value of all the mortgage debt, you'd find that adjustable rate mortgages represent a very high percentage.
Except they don't all adjust at once. They adjust over 1 to 7 years. So why are you so worried about what's happening in the short term? By 7 years from now, the economy will look a lot different, no doubt.
It'll probably be a lot worse. But, as they start to adjust, that's a lot of people with a lot of mortgages. That's a lot of real estate going into foreclosure. People cannot pay these mortgage payments. In fact, a lot of people bought homes with mortgages that they knew they couldn't make. Basically, they figured they would bail themselves out with the appreciation. When the appreciation is not there, they have no way of making these payments.
Okay. All right. If things are as bad as you say, then what do you buy? How do you make money, if at all?
Well, what you have to understand is the biggest casualty in this entire equation is the U.S. dollar and the American standard of living, which the dollar supports. So once you understand that the dollar is going to get destroyed, or it's going to lose better than half its value, the best way to protect yourself is to invest abroad. So what you do is you invest in a conservative portfolio of, I like high dividend paying, of foreign stocks, mainly utilities, commercial property trusts. We buy a lot of natural resource companies, a lot of oil and gas companies. We also buy foreign government bonds, corporate bonds, and a lot of precious metals, gold and silver, for example. The Dow today is trading at about 18 ounces of gold. It's off about 10% on the year. I think by the end of the year, you can see the Dow Jones down to about 15 ounces of gold. And I think the bear market in U.S. stocks versus gold is going to continue for many, many years.
Where does gold go?
Well, it goes a lot higher. It goes a lot higher. I think by the end of the year, we can be back up above 700 again. I certainly think next year we'll take out the all-time high, 850 or so, and then I think ultimately we will make a new all-time high adjusted for inflation, which would probably could put gold, north of $2,500.
I got about 30 seconds left. You give us a target for gold. Can you give us a target for stocks? How far are we going to fall?
Well, I think we're going to fall quite a bit in terms of real value, meaning priced in gold. I don't know how much we're going to fall in terms of U.S. currency, the dollar, because the dollar is also going to lose a lot of value. So to compare stocks to the dollar might not be a very fair comparison. People really need to pay attention to the inflationary time period that we're living in. Despite what Wall Street tells us and what the government tells us, there's a lot of inflation. The cost of living is rising. So the nominal value of the Dow can be paint a very unrealistic picture of what's really happening.
All right, Peter Schiff, the CEO of Euro Pacific. Thank you for joining us.